market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. Happy Thursday. We have a lot of things going on. I'm Francine Lacqua here in London. Now, to talk about President Biden, to talk about what this means for the markets, of course, President Biden yesterday saying that he had COVID. Let's talk about all of these markets. Let's talk about Fed speak. Let's talk about some of the tech as well. We're joined by Ann-Katrin, Petersen, investment strategist at BlackRock Investment Institute, and Bloomberg's Justina. Lisa, thank you both for joining us. Justina, we've been talking about a great rotation. We've been talking about the Trump put. I mean, when's the ideal time to start really assessing what happens in the U.S. and the reverberation that U.S. politics has across the world?
Yeah, I think it's hard to tell, right? I think what people are tracking are like the odds of a Trump election. And that kind of tends to be a bit clearer, sort of like closer to the election. Of course, we're also watching, is Biden actually going to be the candidate here? But so far, we've seen quite a big reaction in bonds. And I think that is also somewhat feeding through to the equity market through this great rotation, because people are thinking, are we going to be back in sort of an inflationary environment? And that seems to be kind of what's playing out in equity markets right now.
How do you see the great rotation behaving? Because I feel it's like 2 days of great rotation and then question marks, and then maybe we go back to it. Are we going to have a very volatile period?
Yeah, I think what traders are reacting to is we've seen this mega cap tech trend looking pretty overstretched. And so they really took that kind of U.S. rate cut signal as a sign to really rotate into a lot of the laggards. But I think beyond that, I mean, by now we've kind of had, 6 days of the rotation. I think it's a bit harder to tell because everyone's always been enamored with the tech safety trade, and they kind of like it regardless of the environment. And small caps have faced a lot of structural headwinds over the last few years. They're more indebted. They're not kind of taking advantage of these big secular trends. So I think it really remains to be seen whether this rotation can continue.
Yeah, let's also get into the conversation. Ann-Katrin Petersen from BlackRock. Ann-Katrin, when you look at some of the great rotation, again, how much further can it go? And what are you looking at in terms of good investments going forward?
Yeah, thanks so much, and good morning, Francine. So what we've witnessed is that the cooling inflation in the U.S. has led to a reversal of the momentum trade. But what we are keeping a close eye on is the earnings season now kicking off for the second quarter. And as a matter of fact, in Russell 2000, which has of late outperformed the large cap tech heavy Nasdaq, in the Russell 2000, we are observing that 40% of earnings are currently contracting, whilst consensus and also the BlackRock Investment Institute expect that in terms of corporate earnings, the tech leadership will likely continue. And hence, we think that this rally of the past days could lose some steam, and we stick to watching what the transformative impact will be in the earnings seasons, the transformative impact of investment in the real economy related also to artificial intelligence. So be it technology, be it infrastructure, and also energy systems that need to be built for this transformation.
Yeah. So, Ann-Katrin, I mean, again, U.S. stocks hit a new record high. Then we're seeing, some of what's going on in Treasury yields. Again, how do you see these opposing views, and when do they stabilize, if they stabilize?
So what we continue to prefer at the current juncture is the U.S. equity market based on the AI theme. When it comes to the U.S. Treasury market, we're tactically, so over the next 6 to 12 months, neutrally positioned, as we think that the long-term yield can swing in both directions. What we like, though, is income in fixed income. This relates both to the U.S., but also to Europe, as well as investment grade credit. So we think in a world where rates will be structurally higher, yes, we're talking about rate cuts, and the ECB will be meeting today. And the market consensus on Fed rate cut in September is building. But this will be an environment where the room for rate cuts is relatively limited. So we think that rates will be structurally higher, and this supports the appeal of income and fixed income.
Okay, so Justina, keep it there. So the shorter term, let's talk politics now. Joe Biden under renewed pressure to step aside after several top Democrats met with the president this week. Now, Chuck Schumer and Nancy Pelosi are among those who are reported to have spoken to him about his candidacy. Meanwhile, the president has caught COVID. The symptoms are said to be mild. Now, ahead of his diagnosis, Biden said Kamala Harris, his vice president, could lead if his health declined.
Only if I was told that there was some medical condition that I had. And that's not the case. So, but I understand what people say. Look, I'm only 3 years older than Trump, okay? And I think I'm in a little better physical shape than he is.
Well, let's bring in Bloomberg's Europe executive editor, Chad Thomas. Chad, Biden cannot seem to catch a break, can he?
Yeah, Francine, if you think about the image this projects coming down with COVID, he had hoped to do some counter-programming to the Republican National Convention this week. Instead, he's in isolation because of that COVID diagnosis. This comes as U.S. media is reporting that the top Democrats, the two top Democrats in Congress, along with Nancy Pelosi, of course, the former House Speaker, have all privately told the president that they do not believe he can win in November. They're citing some internal polling from Democratic groups that show Biden is significantly behind in a number of key swing states. Pennsylvania, Michigan, and Wisconsin, all those states are swing states in the Midwest, and that polling shows that those are states he has to win, and at the moment he's 5 percentage points or more behind in those states. So the bad news continues to unfold for President Biden. It'll be interesting to see what he has to say now in the coming days about his nomination. The New York Times is reporting this morning that he is privately opening up to listening to some of these arguments about him stepping aside, but that he has made no decision as such that he would, in fact, do that.
Chad, meanwhile, J.D. Vance has also given his first speech as the Republican vice presidential nominee in Milwaukee, throwing his weight behind Donald Trump.
They said he was a tyrant. They said he must be stopped at all costs. But how did he respond? He called for national unity, for national calm, literally right after an assassin nearly took his life.
So, Chad, what can you tell us about this? First of all, it doesn't seem that, Donald Trump is trying to widen his base. It's almost looking like he actually appointed an heir to be his vice president. But has he called for unity?
Yeah, well, it seems like, Francine, he's called for unity within the Republican Party, and that is exactly what they've been projecting at the convention. If the Democrats are in disarray, the Republicans have all lined up behind Donald Trump. J.D. Vance, of course, coming out, it was his coming out speech event at the convention. Of course, as you know, these speeches are broadcast in prime time in the U.S., so it was really a chance for him to speak to millions of Americans about his vision for the country, and that vision is very closely aligned with what Donald Trump wants. It's a working class focused agenda. Of course, again, coming back to those swing states we were talking about, they need to win also in places like Pennsylvania and Michigan, and things like factory jobs are very important in those states, and that's why you hear this brand of populism from J.D. Vance and talking about things like tariffs on imports into the U.S.
Chad, thank you so much. Bloomberg's Europe executive editor, of course, talking all things U.S. politics, Chad Thomas. Now, coming up, bullish on the AI boom. The world's largest maker of advanced chips beats estimates, but investor euphoria is dampened by fears over more restrictions on sales to China. We'll have the latest on that next, and this is Bloomberg. TSMC has raised its projections for full-year revenue growth after results beat estimates. riding a global wave of spending on AI. Now, ADRs in the chipmaker for Apple and Nvidia are higher pre-market. Shares closed lower in Taiwan as Donald Trump told Bloomberg that Taiwan should pay for the U.S. for defense against China. So we'll have a full roundup of course, what's supporting these markets. So much talk about Nvidia, but also the tech sector, whether that can continue. So let's get back to our guests, Ann-Katrin and Justina, to figure out what's next for the tech market. And we were talking about the great rotation. When we look at some of the things that we're watching for Justina, look, the NASDAQ looks set for the small bounce after this TSMC beat. But there's a bigger question on what happens with trade tariffs, what happens with chip makers in general. What do you think will support European markets going forward?
Yeah, I think that's really a tough one. I think for Europe, which has always been kind of a more externally oriented market, I think what people are watching is, what's coming out of China, for instance. I mean, we're kind of in the middle of the Chinese kind of plenum right now, where we will hear more about Chinese plans to kind of boost the economy. So I think that's one. And I think, the tech move is definitely another. And I think what's kind of happening this week is also that, the fears that the tech trade is overstretched. I think that's kind of also hanging over this sector, in addition to the news from the U.S. about the trade curbs. But, at least from kind of what we're hearing from TSMC, I mean, the fundamentals are strong. They raised their full year revenue kind of guidance. And so it seems like they're kind of still seeing really strong demand to kind of invest in AI.
Ann-Katrin, what's your take? I mean, again, AI is here. AI is something I hear from like 50% of the people that, it's going to be even faster than we think. And then 50% of investors think we're just getting ahead of ourselves because we're overestimating the impact it has and the timeline of it.
Yeah, I think the impact and timing is a key one. So we continue to be overweight the AI theme. And our base case is one of the concentrated AI scenario over the next 6 to 12 months. That means that it's a handful of tech names, but also energy and utility companies that belong to the initial winners of how the AI theme will evolve over time. So this is why we also continue to like U.S. equities and prefer U.S. equities over Europe, even though we witness an ongoing earnings recovery in Europe, but we think that corporate earnings will continue to come in stronger in the U.S. And one important thing in this context is that the current tech concentration we are monitoring in the U.S. is in this environment of transformation, of big investments that are taking place in this transformation, that this is a feature and not a flaw of the current environment in our view.
Okay, keep it right there because I want to talk a little bit about central banks and, of course, some of the data. And the European Central Bank will be back with Ann-Katrin, Petersen, and Justina Lee in just a second. But let's get over also to Tim Colpin to talk about TSMC and some of the things that we've learned. Tim, thank you so much for joining us. So TSMC has raised its full-year sales growth guidance to be above, I think, mid-20% in terms of U.S. dollars. What does this tell us about the strength of this sector, but also of this company particularly?
Well, it's great news for TSMC and TSMC shareholders. Unfortunately, for the rest of the sector, it may not be as good. TSMC, in addition to raising their own forecast for the year, kept the same level of expected growth for the industry overall. They expect the overall chip industry to grow around 10%, which is exactly what they said 3 months ago. So there's no upside for the rest of the industry. In addition, they basically left unchanged their CapEx guidance. Now, they narrowed the forecast range of their CapEx guidance, but essentially it was unchanged. So for the equipment sellers like ASML or Tokyo Electron, not a lot of upside from TSMC either. But TSMC themselves, yeah, they're looking better, probably because they have a lock on the very leading edge technology, the AI technology, which is used by NVIDIA and AMD and Intel and all those other companies that are in the AI space, and they're able to raise the prices of their products a little bit. So in a nutshell, great for TSMC, not necessarily everybody else.
So what about news of possible chip curbs and comments from Donald Trump about Taiwan's chip industry?
It's hard to slice that any other way than negative. On the Biden side, Bloomberg News reported that the Biden administration may tighten the curbs on equipment that gets sold to Chinese companies. So that's ASML, Tokyo Electron could be affected there. On the Trump side, Donald Trump spoke to Bloomberg Business Week and basically repeated a statement that he'd said previously that Taiwan stole 100% of the U.S. chip industry. It's not factually correct. The implication being that if he was to come back to power, he would do something about it. Not sure exactly what, but possibly tariffs or do more to ensure that there is more chips made in America. But either way, it's very hard to see good news from either Biden or Trump in the Asian chip sector.
Tim, thank you so much. Bloomberg Opinion's Tim Colpin there with the very latest on the chip sector. Coming up, it's the ECB decision day. Attention will be on President Christine Lagarde and the prospect of autumn rate cuts for the euro area. We're live in Frankfurt next, and this is Bloomberg. Welcome back, everyone. So could the ECB be about to prime investors for another rate cut, even if a move today is effectively ruled out? Now, traders are likely to watch closely for clues from President Christine Lagarde on the prospect for the September meeting. Let's bring in Bloomberg's Lizzie Burden, who's in Frankfurt for us. So, Lizzie, first of all, markets are looking for a September cut, but also the Governing Council seems to be pretty divided.
Indeed, Francine. It's all eyes on September, as you say, because by then there'll be more data on inflation and wages. You've had lots of policymakers expressing, including Christine Lagarde, that they would prefer to go when there are forecasts, and that is once a quarter, of course. And also by September, there is going to be more clarity, hopefully, on what the Fed's doing and on how the French politics are going to shake out, her homeland, of course. So then the question today becomes how Christine Lagarde communicates that September rate cut. She's very well learned the lesson we expect from the June cut of the dangers of over-telegraphing what comes next. So I expect that she is going to draw on the Sintra playbook and really emphasise data dependence, not try to knock the market expectations, which currently are fully pricing one more rate cut, really leaning into two more rate cuts as well. And I think the big question is whether she reintroduces the easing bias in the guidance that accompanies the decision later today.
Lizzie, thank you so much. As always, Lizzie Burden there in Frankfurt for the European Central Bank. Now, still with us, Ann-Katrin Petersen, investment strategist at BlackRock Investment Institute. Ann-Katrin, what are you expecting to hear from President Lagarde later?
So I think in a nutshell, she will convey a message that the ECB will be on hold today, so no rate cut expected, but not be on autopilot going forward. So I expect that the ECB, that Madame Lagarde will reiterate the data-dependent meeting-by-meeting approach and not pre-commit to a September rate cut. Because basically the ECB, and that's also a message that the ECB conveyed at the Sintra conference, is waiting for and will act on forthcoming data until the September meeting in order to confirm its assumed, its projected inflation path by 2025, so hitting the 2% by the end of 2025. Investors should keep the big picture in mind, in my view. This is that rates will likely be structurally higher in the euro area, so this is not your typical rate cutting cycle. The ECB is cutting when growth is basically improving, inflation is still above 2%, unemployment is at the record low. And we think that sticky inflation will mean that policy remains tight. And this is supporting the appeal of income in our view.
Yeah, Ann-Katrin, thank you so much. Ann-Katrin Petersen there from BlackRock Investment Institute. Of course, if you look at the data, we had some recent indicators that have been signaling, of course, that the euro area's recovery may have lost a little bit of steam. Manufacturing has suffered yet another blow. We're also looking at services sector slowing confidence, with confidence fading due to heightened uncertainty. Now, coming up, Keir Starmer hosts dozens of European leaders for a crucial summit at Blenheim Palace, the birthplace of Winston Churchill. These are live pictures, and we're live with the latest from there next. This is Bloomberg.